Number 11. So basically, one of the things that I tell people to do is that when you create a company, you have to create a board of advisory for that company. What is a board of advisory? An advisory board is just a board of members who give advice to the company, who help the company with advice. And what happens is, when you create an advisory board, what I tell people is include your family members on your advisory board. Your wife, your children, your brother, include your family on the advisory board. As long as you're providing service, you're doing something on that advisory board, that amount is deductible. It means that you can go and spend your Christmas meal with your family and deduct that amount of money as long as you're discussing business around the table. You have all your board members there, you're sitting across your dinner table, and then you're talking about the business. That becomes a board, an advisory board meeting, and it's also deductible. And to set up an advisory board, that's something we can talk about. As long as you create a business, always create a board of directors, an advisory board if it's an LLC, and things like that. Number 12, you want to take deductions of things like travel, auto, dining. How do you take those? You take those, for example, if you have your family members working with you in your corporation, you can use that as well to deduct most of the expenses you're going to be incurring. Another one is have your children work for you. Your children working for you is a very important tax strategy. When your children work for you, what you can do is beyond anything. I mean, you can build generational wealth just by making your children earn less than standard deduction. It is already taxed. It's after tax money, creating a vehicle for them to make money. That is a very, very big one that you can make a lot. You can create generational wealth for your children just by making them work for you and you're paying them the minimum wage. Another thing, but that again, that is something that we have to set up properly so that you make sure you're optimizing, you're getting it in the right way. Another thing you need to do is you have to pay your spouse. Why do you pay your spouse? The reason you're putting your spouse payroll is not just because of the deduction. It's because you are able to do something. You can help put more money in your solo 401k, helps fund the solo 401k. Remember, in 2022, the amount of money you can put in the solo 401k goes up to about $60,000. That's a lot of money that you are deferring taxes on. Another one, you can create an HRA plan. It helps you create an HRA plan. Number 19, I just talked about solo 401k. That's where you can put a good amount of money. Remember, to create a solo 401k, that has to be done before the end of the year. You have to do that before the end of the year. And then that was number 19. Number 20. Number 20 is you have to reorganize yourself. Reorganize your businesses. I've seen so many people come to me with businesses. They have created some entities. They have not used those entities. Make sure you close any entities that you are not using during the end of the year. And if you have to create new business, please create those new businesses at the beginning of the new year. You don't want to have part year businesses. Start your business in the new year. That's a better way of doing your taxes than waiting to do them after the year end. Those are the 20 tax optimization strategies that I just gave there.